you mentioned on one thing, which is like kind of like having operators in different areas in different parts of town. How important is the management on an apartment complex? Is I'm getting the feeling, or I know that the manager is probably one of the most important things.
Very much.
And who are the different players in like a team or your team that help you run a portfolio like this?
Yeah, man. Um, there's three things that matter in us doing deals. One is finding deals. Two is raising money. Three is operations, right? Everybody thinks, hey, if I can find a deal and raise money, I can take deals down. Yeah, but that doesn't mean you can keep them, right? Like now that's when the real work begins, is once you buy the deal and you have to operate it. And I think there's going to be a lot of stuff coming online because people can raise money because money's easy to raise, right? And maybe they found a deal, but that doesn't mean that they can operate them. And I think there's going to be some deals, coming online from people who jumped into multifamily and didn't really have the education or the experience to get in that asset class.
I'll tell you this, Tim, when the market is good, everything works.
Yeah.
But whenever, like, for example, like I remember when the pandemic started, I remember you were one of the very first people that was all involved in the tenant laws. And I didn't raise rents on any of my properties during the eviction moratorium. I didn't want to give anybody any reasons not to pay their rent. And all of that, like the management team has a lot to do with that. And you were very like proactive about it. You were posting stuff online right away. So who would be the key players, or who would be the different players that you would say that would make up a solid operations team?
Sure. So let's assume you have a 100-unit apartment building. Once you get over, and I'm using like unit numbers because it's easier to quantify, but really on your 24 unit in California, your rents are enough to probably substantiate an on-site property manager. In the markets that I buy in, there's secondary markets in, South Carolina, Georgia, Louisiana, Alabama. I have stuff in Mississippi. I have stuff in North Carolina. So but they're secondary kind of markets. So my average rent is somewhere between $700 to $1,200, depending on the property. For that size rent, I need at least like 70 to 100 units in order to justify on-site property management. So let's assume I'm going to have a 100-unit building. That 100-unit building typically has 4 people that work at the building. About 2 maintenance guys for every 100 units, 1 part-time leasing agent, and then a full-time property manager. That's their on-site, on-salary, working for the building. Then I layer that with a third-party property management company because they don't really have to do much other than just watch the personnel who are at the property, put reports together, handle bill pay, accounts receivable, accounts payable, that kind of stuff. They only charge me a 3% management fee. That's it. Because I have salaries. Then I have management, right? And then at my office, in my headquarters, somebody who's on my payroll, I have a COO or a director of asset management. You can have whoever you need, but you really just need one person who's actively asking questions all the time to the management company. And he hops on a call once a week with everybody for every property we own. So he'll hop on a call and say, hey, let's go through the metrics. And the property manager will give their metrics. The maintenance staff will give their metrics. The leasing agent will give their metrics. The property management company will answer any sort of questions and metrics that they have. And they just make sure everybody's on the same page every single week. And it's a 15-minute call at most. And then, then we review the reports either on a weekly or monthly basis, depending on how often they come out, and just ask questions about it. If you're not paying attention to your property, guess what? Neither are they. So you got to make sure you're asking questions and putting your eyes on the property. If it's local, you should go and put your eyes on it at least once or twice a month. And if it's not you, it needs to be somebody reliable and somebody responsible that can go and, my COO or my boots on the ground partner or joint venture partner of some sort that can just keep everybody honest, right? If they can go out there and check out the property, like that's keeps everybody else honest. Like, oh, the owner showed up and they're doing a surprise visit. Like that keeps the trash off the ground. It keeps the lights on. It keeps everybody from sleeping at their desk and all that stuff. So, just doing things like that are a little bit more proactive. I mean, it's an asset, right? It's worth millions of dollars. What are you gonna sleep on it? Like, no, man, this is an asset that can make you or can break you. Because just as quickly as you can build wealth with apartments, you can also get wiped out from one bad deal. You can wipe out the profits of 5 good ones. So like you got to just keep doing good deals and pay attention to those deals.
Yeah, I agree with you. I think that when the market is good, everybody does well, and then when the market goes bad, it really shows who doesn't have their pants on right. But I wanted to ask you,
good market will hide a lot of mistakes, you know.
Yeah.
And so, and a bad market will expose you. So just, be ready.